Good evening, guys. It's Buffy again. I am back with some more information on the tariffs. If you want to see like an overall video, look at what is really going on with Trump's tariffs. That'll be first. I can probably do a playlist. But let's get started. First of all, the effects on the tariffs, the effects of the tariffs, actually effective today. Essentially, negotiations broke down, and so there is a potential to send further ripples to the United States and its citizens and the economy and such. There's worry about higher costs in gasoline. I know a lot of people are concerned about that because the higher costs with the tariffs is going to lead to the refiners needing to increase their prices to be able to settle their bottom line, and then disruption, in the supply chain. And essentially, with Mexico and Canada being some of our go-to partners, or at least in the past they were, there's kind of an integration between those three parties, essentially. So essentially, the U.S. imports 4.4 million barrels per day of crude oil in Canada, which is about 27% of their total demand on that. Also, the country is divided into what is called the Petroleum Administration for Defense Districts, or PAD. So the East Coast is PAD 1, the Midwest is PAD 2, the Gulf Coast is PAD 3, the Rocky Mountain region is PAD 4, and the West Coast is PAD 5. So if you see that in articles, and this is all according to Forbes. Additionally, the Midwest, which I'm actually from the Midwest, is actually very dependent on Canadian oil. They get 3.5 million barrels per day, which is roughly 75% of Canada's total exports. So essentially, that means that the Midwest is probably going to take a larger hit than a lot of other areas in the country. So if you're in the Midwest, then be prepared for that. Also, both the Midwest and the Rocky Mountain regions have spent billions of dollars trying to increase their infrastructure and their operation to be able to work with heavy sour crude that comes from Canada so that they could get it at a cheaper price to be able to increase their profit margins. But with the 10% tariff, that will increase their cost, and thus they're going to pass it on to us in the form of higher gasoline prices, higher diesel, higher jet fuel. I mean, how many of us are buying jet fuel? But you get the point. I mean, it transcends to travel and transportation and things like that. Also, it can actually substitute with more expensive options or other options which are further away. But again, that presents both, financial costs to that, as well as logistic costs, as well as the ability of time. According to Forbes, most of the analysts that have spoken believe that the relationship that has existed between Canada and the United States, that they will continue to process Canadian oil, and 90% of it would still likely flow to the U.S. But again, that's going to come at an increased price and added tariffs and things like that. Also, California and New England rely on Canada crude oil as well, shipped from Newfoundland and Alberta. They may seek alternatives such as Alaskan North Slope or ANS, or the heavier Middle Eastern grades, which again, we're talking about cost, we're talking about logistics, we're talking about time. The impact on the Mexican imports is even more significant than Canada, because the U.S. imported 625,000 barrels per day in 2024, mainly from Maya crude, which is intended for the Gulf Coast. Heavy crude is critical, or it's a raw material used to make better quality oils. So that's important. So there's belief that maybe the Mayan crude could actually face sharp decline there. And also because the Gulf Coast has a lot more alternatives, like Venezuela, the Middle East heavy grade, And they could also have some redirected oil coming from Canada, which again is higher costs, logistic issues, disruptions in the supply chain and such. And, a lot of countries have become very dependent on oil, and gasoline and things like that. Also, a bigger picture is essentially higher refining costs, which of course we're going to end up getting the higher costs too, and we'll pay for that. Lower profits for the U.S. refineries, less capital expenditures, delayed manufacturing, job losses for those that are in the oil and gas industry. It all kind of trickles down. Kind of think of Reagan with the trickle down economics thing. Excuse me. It could also bleed into other industries that might not on the surface seem like they would have anything to do with gasoline or oil or anything like that. For instance, the oil and gas industry is obviously very obvious. Transportation, agriculture, and manufacturing could also see some hits as far as job loss and things like that, layoffs. Also, the energy market can react to uncertainty because it's used to the up and down of prices and things like that. But if tariffs cause supply chain issues and inefficiencies, or a risk of retaliation of tariffs from Canada or Mexico, this could further increase the volatility of the market, which again means prices, means stock market issues, means some job loss, means, there's so many things. It's when you look at a situation like this, at first it's kind of like, well, how is everything connected? But I think like the bigger picture is like our system and our world currently, everything seems to be connected, and especially like transportation and things like that, and oil and things that we actually rely on. So the problem we're thinking, and the problem that a lot of people are thinking of is like, what are the long-term consequences going to be? And how long-term are we talking? Mexico could shift their trade patterns away from us. They could raise costs for Gulf Coast refineries. Energy can adjust to policy changes, but that takes time. And oftentimes time, they say time means money. That sounds kind of like a cliche, but in this scenario where everyone's wanting oil, everyone's wanting to go somewhere. You have spring coming up, you have summer coming up when people travel. Is that going to adjust and actually disrupt some of the plans and again, kind of further affect certain things? Also, they say, like I said, time is money. And if the tariffs remain high, that means high fuel prices, market instability, economic deficiencies, meaning there's going to be people that are without certain things based on that. Also, it ultimately raises the question of if the benefits of trade leverage are worth the cost to the American consumer. And that's only something that our lawmakers can consider, because none of us have the power to be able to say, yes, that is affecting everything. That is affecting our bottom line. Excuse me. And the Midwest specifically is going to be the hardest hit on this, it seems, according to Forbes and according to Evergreen Action. They're looking at probably 25 to 50 cents per gallon increase in gas prices. And we're talking about Michigan there. We're talking about Minnesota. We're talking about Wisconsin. It doesn't directly impact. So the other issue too is they also have issues with electricity and power, essentially, because Minnesota and Wisconsin share electricity with Canada and rely on Canada. Wisconsin is not in that area specifically, but they do share with Michigan and Minnesota. So that's kind of going on. They all three of those will actually likely have an impact of 25 to 50 cents per gallon increase. They will have the highest increase in electricity, natural gas, gasoline. They also rely on hydropower and electricity, which that also is another reliance on Canada. They are the second largest importer of Canada and Mexico, the things that they provide. They have a 35% tariff from U.S. and Ontario and Minnesota. They have a 10% natural gas tariff, which is an increase in heating costs in Minnesota, as well as in Michigan. Additionally, the auto industry is facing tariffs in a month. So this could potentially freeze investments, private investments, threaten jobs in the auto and mobility industries. And this affects 20% of of Michigan auto workers. Michigan is a big auto industry. Additionally, according to Evergreen Action, this is what tariffs mean for the Midwest, namely these three. And so it's kind of concerning, coming from, those areas. And to dive just a little bit deeper, we're looking at potential electric grid disruptions, higher power bills. Michigan and Minnesota rely on Canadian imports for electricity. The Ontario Premier announced that retaliatory tariffs of 25% on electricity in Michigan, Minnesota, and New York, in addition to the 10% of Trump's tariffs. And he has even gone so far as to say that if the trade war escalates, that he would cut off power. And the power grid is shared between the U.S. and Canada. So you have 1.5 million households in Michigan, Minnesota, and New York who are relying on Ontario for the power. And that's 10% of the households in these three states. Additionally, tariffs could lead to instability to hit clean energy and pollution targets, which was something that, we had wanted to have as a goal, a great goal, an important goal, especially for our children and other generations. Additionally, utilities rely on imported materials for power lines and transformers. Wind and solar and other power plants rely on steel and aluminum, which there was will be a tariff put in on 312. It also makes it harder to build infrastructure to address high energy costs, which seems to be the solution for the high energy costs, is to build something domestically to be able to kind of control some of the high energy costs and not be overly reliant on certain other countries. Because if there's a scenario like this, then we're kind of stuck. We're essentially held hostage, based on if they want to retaliate against us or tariffs or such. Interesting fact, the grid operator in New York has already raised alarm about serious adverse effects of reliability and wholesale electric markets from these tariffs. Like I said, the states in the Midwest are bearing the biggest burden here on Canada tariffs. The primary effects will raise costs and increase inflation, even in areas that you might not even think of. Think about food, gasoline is transportation. How does some of the food get to us? Again, transportation. I know I referenced in my previous video about COVID-19, same thing. So there's going to be a war on low-cost, clean energy, which removes the solution to lowering the prices of high-cost energy and making the problem worse. There's no long-term solution currently to build domestic industries. And President Trump had promised to cut energy costs in half in 1 year's time. I guess we'll have to wait and see if that happens. Hopefully he's able to resolve this favorably to us, and that this will all be for naught. So anyway, if you got some value from this video, please like and subscribe. Feel free to leave a comment. And I hope you have a great great evening. And thanks for watching. Have a great day. Bye-bye.